Hello, myself Vaishnavi. Today I'll be presenting my project FinSight Agents. This project explores how artificial intelligent agents behave in a simulated stock market and how their collective decisions affect stock prices. The main goal of FinSight is to model human-like trader behavior, how investors buy or sell based on market trends, news, or peer influence. Overview of the project. FinSight Agents is basically a virtual stock market simulation built using artificial intelligence. Here we create different types of AI trader agents that behave like real investors. For example, aggressive traders who love taking risks, or caution ones who prefer safe stocks. Each agent receives three types of inputs before making a decision. Stock market data, live prices, previous trends, and volume. Macroeconomic news and sentiment. For example, if there's news about inflation or oil prices rising. Peer communication and influence. Agents can observe what other agents are doing and get influenced, just like in real social trading environments. After processing these, each agent decides whether to buy, sell, or hold a stock. So overall, FinSight shows how market behavior can be simulated using intelligent, personality-driven AI agents, which gives us insight why prices move the way they do in real life. Mathematical foundation. Behind all this simulation, there's a strong mathematical foundation that keeps the market realistic. We calculate net demand ratio, which represents how much buying pressure versus selling pressure there is in the system. It is given by the formula net demand is equals to buy volume minus sell volume. Net demand ratio will be net demand by average volume. If the buying volume is higher, prices will go up. If the selling dominates, prices will fall. Then we use the net demand ratio to calculate the percentage change in price using the formula change percentage is equals to net demand ratio into volatility into scaling factor. This determines how sensitive a stock's price is to demand changes. Finally, the new stock price is calculated as new price is equals to old price into 1 plus change percentage. Each agent also tracks its net worth, which is its remaining balance plus the total volume of its own. Which agents buy more, their average buy price change accordingly. All these formula together make the market dynamic and realistic, where prices constantly adjust just like in the real world based on demand, supply, and volatility. Tech stack. To build this project, we use a modern and flexible tech stack that combines front-end visualization, back-end APIs, and AI models. On the front end, we use React and Recharts to create interactive dashboards that show real-time market changes. On the back end, we use Fast API, a Python framework that is lightweight and perfect for serving AI models and data. For the AI models, we use both Gemini API, Pro and Flash versions for powerful cloud-based reasoning and Ollama for running smaller local models directly on the system. We also integrated Socket AI I/O, which allows live communication between the server and client, so prices and decisions update automatically every 3 seconds. This setup makes our system both fast and realistic, mimicking how live stocks markets function. The architecture of FinSight Agents is designed like a real stock market system. It has 5 main parts. First, the data layer collects stock prices, news, and market sentiment. Next, the AI agent layer has different trader agents like aggressive or cautious ones that use models such as Gemini and Ollama to decide whether to buy or sell or hold stocks. Then the orchestration layer, built with Fast API, connects these agents to different AI models and manages their responses. The simulation layer calculates the new stock prices using demand and supply formulas. Finally, the front end, made with React and Socket I/O, shows real-time graphs and live price changes every few seconds. So altogether, the architecture creates a dynamic AI-driven market that behaves just like a real trading environment. This is the demo of our project. First, we need to sign in or create an account. And in the sign in, we need to give the email and the password and then sign in. We'll first have a dashboard. The dashboard shows different companies and the live market, the prices of each company. And when you click on each of the company, you will be shown the price and the recent price changes or the stock market changes of these companies. And the transaction history, whether you have bought, sold the company stocks. And then the agent management. The agent management has different agents which uh, behaves based on its behavior. It makes decisions based on recent news and peer decisions. They analyze this information using their assigned AI model and then decide whether to buy, sell, or hold. For example, when good news about technology companies appears, aggressive agents immediately buy tech stocks. Meanwhile, cautious agents avoid these risky trades and prefer safe, slow-growing companies. This different behavior shows how varied personalities affect market outcomes, just like human investors. As agents continue trading, the price chart automatically updates using socket.io. Every 3 seconds, new buy and sell pressures are calculated and the price rise or fall based on demand. When more agents are buying, you will see the graph shoot upward. When panic selling begins, price drops sharply. This gives us realistic picture of market volatility. This simulation helps us study how group behavior and emotions can drive the market. For instance, when positive hype spreads among agents, it can lead to bubbles, and when fear spreads, it can cause crashes. This experiment is used for understanding financial psychology and behavioral economics, where not just data but human-like emotions drive the market. You can see the price of each, like how net worth of each model, whether on its decisions, and how each of the model has reacted to the news, whether it has decided to sell or buy the stock or hold the stock. We'll also have a portfolio which will show the net worth of each and its ranking. So overall, FinSight agents successfully demonstrate how multiple AI-powered traders interact in real time and how their decisions collectively create market movement, just like in the real world. Comparing with the stock agent paper, the dynamic versus static market. The stock agent paper used a static valuation model, meaning stock agent prices were calculated theoretically and didn't change frequently. In contrast, FinSight uses a dynamic demand-based simulation, where the price constantly changes depending on real-time buy and sell actions. Real-time versus daily simulation. Stock agent ran a day by day simulation where results updated only once per training day. FinSight is real time. Prices refresh every 3 seconds using socket.io. Multi-model architecture. The paper used only 2 AI models. We build a flexible AI orchestration system using fast API which can route prompts to different models, both online like Gemini and offline like Olama. Performance analysis and model behavior. Gemini Pro and Flash perform the best. They perform their trading personas exactly as we defined. For example, aggressive agents quickly bought stocks related to positive hype, like AI companies or oil stocks, and sold instantly when negative news appeared, like bank stress tests or antitrust cases. On the other hand, cautious agents ignored hype, choose safe stocks like Coca-Cola and Johnson & Johnson, and sometimes even sold into good news to avoid volatility. Their output was also 100% reliable. They generated structured JSON with clear buy, sell, or hold decisions. Tiny Llama, the local model, failed completely. It didn't follow logic or persona. For instance, it decided to buy Tesla because of the battery fire risk and buy Google because of Disney News. It also made up fake information and often didn't output usable results. For this, we learned that high quality reasoning models like Gemini are essential when simulating realistic financial agents. To conclude, FinSight Agents is a powerful combination of AI, mathematics, and market simulation. It helps researchers and students visualize how collective investor psychology impacts model trends. Thank you.